In exercise 14-8, we've been presented with selected data from Queen's Product Company for 2017 and 16, and we've been asked to compute 4 ratios: the profit margin, asset turnover, return on assets, and return on equity. So let's first identify the ratios, what their formulas are, and we will see the calculations, what they will be. So profit margin is net income divided by net sales. So this basically means for every dollar in sales, how much did you generate in net income? So it's ultimately the test, the bottom line test. So in this case, we had 45,000 in net income, that was here, and our net sales is 750,000. 45 divided by 750 is 6%, which basically means for every dollar in sales, we have 45, for every dollar in sales, we have 6 cents in profit that has remained with us. The next one is the asset turnover ratio. The asset turnover ratio is calculated at net sales divided by average total assets. Here what we are concerned with is for every dollar I invest in assets in the company, how much am I producing in sales? So it's basically the return on assets that we're looking at over here, as in how much I'm managing to turn it over. Okay. So here the calculations based on the numbers we have: net sales is 750 and our total assets is 580, and that works out to 1.39%, which is a relatively healthy number. Now, return on assets is calculated as net income divided by average total assets. So here basically we're saying for every dollar that is invested in assets, how much did you produce in sales? Here we are saying for every dollar in assets, how much did you get in the bottom line number? So you're taking these two numbers that were there and putting them in the numerator over here. So it's 8.33%. Return on assets and return on equity are expressed as percentages. Turnovers are always just expressed as a number here, typically in 2 decimal places. So over here it's going to be, again, net income. What kind of return did we get on the equity? Now remember, total assets in the balance sheet equals liabilities plus equity. Here now I'm concerned only with equity part, not the financing done by the creditors. And our answer is 11.92%. Okay. So in all of these, what we're concerned with is the profitability of the company. For every dollar that you make in net income, how much did you have to earn in order to get that? So for every dollar in sales, how much resulted in net income? For every dollar you put in assets, how much did you produce in sales? For every dollar in assets, what kind of return did you get? What's the net income number? For the investors' investment, the total equity, what's the net income? So basically what we're getting in at over here is all the numbers that are produced in financial accounting. We're analyzing those to see how profitable a company is. Do I want to invest in that company? And if I am the company, I want to see what can I do to give better returns to my shareholders.